In this video, I will reveal my best trend following strategy to make consistent profit in trading. This strategy is called the trend line strategy. This strategy has been tested and has proven to have a 90% win rate in the market. Ensure to watch till end as you will learn how to draw 10 lines correctly and how to find high probability trade setups using trend line. Don't forget to like this video, subscribe to our channel, and turn on the notification bell so you don't miss out on any of our new videos. Now let's get started. Trend lines are simply key levels that are formed in a trending market. And the reason we draw them is because usually when the price approaches these key levels, it can offer you multiple high win rate trade opportunities. For example, in a trend line strategy, there are two types of patterns that may form when price approaches a trend line. The first pattern is called the continuation pattern, which is formed when the price bounces back to the direction of a trend right after hitting a trend line. And the second pattern is the breakout pattern, which is formed when the price broke out of a trend line, causing the trend to switch directions. Now remember, just because the price hits the trend line doesn't guarantee that a trend change will occur. You need to use additional price action techniques to confirm your analysis. One of the most common questions that beginners ask when drawing trend lines is, should you draw them hitting the wick's end, the candle's close, or the candle's body? Well, the answer is, you want to draw them where it can get you the most amount of touches as possible. Let me give you an example. In this chart, we spotted a current uptrend as price made higher highs and higher lows. Now, because this is an uptrend, it means you want to place your trend line below the trend. Then, you want to adjust the trend line to get as many touches as possible. Now notice that there are some points that are overlapping the trend line, and some that are not even touching the trend line at all, which is perfectly fine because, remember, a trend line is supposed to be treated as a general area, just like support and resistance. So let's look at another example. Here we spotted a current downtrend as price made lower highs and lower lows. And because this is a downtrend, it means you want to place your trend line above the trend. And again, you adjust it to get as many touches as possible. It's that simple. So now that you know how to draw trend lines effectively, it's time to go in depth into how you can utilize these trend lines to find high probability trade setups. So first, let's start with the continuation pattern, which is a pattern that occurs when price bounces back to the direction of a trend right after hitting a trend line. Now remember, you cannot immediately take a position just because the price hits a trend line. You need to use other price action techniques to confirm your analysis. And a good technique that you can use to confirm a continuation pattern is by drawing a mini trend line right at the pullback. The next step is to wait for the price to confirm the continuation pattern by waiting for it to break out of the mini trend line. Once the pattern is confirmed, you take a buy position and watch price move in your favor. Let's look at another example. In this chart, we spotted a downtrend. So we place our trend line above here. Then as we look at the current price, we spotted another possible continuation pattern. So the next step is, you want to confirm the continuation pattern by drawing a mini trend line at the pullback. And once the price breaks out, you take a sell position and watch price push downwards. Now another indicator that can also help you confirm a continuation pattern is the stochastics. Here's how the strategy works. In this chart, we spotted a current uptrend, and so we place our trend line below it. Now as price hits the trend line, notice that the stochastics is at the oversold level. So you want to utilize the stochastics to help us confirm the continuation pattern by waiting for it to cross back inside the oversold level. Once the pattern is confirmed, you take a buy position and watch price move in your favor. So let's look at another example. If you're looking for a reliable crypto platform to trade and invest in crypto coins, consider registering with one of the largest cryptocurrency exchange platforms, Bybit. Once you've created your account, navigate to the market overview on the homepage. Here, you can access the list of cryptocurrencies available on Bybit. If you click on Trade, a page opens that allows you to access the price chart and trading tools to analyze the current technical situation of the market. You can also place buy and sell orders directly from this page and search for any cryptocurrency you want from the top left corner. So if you'd like to receive a $30 bonus on your initial $100 deposit, simply sign up to Bybit through the link in the description. In this chart, we spotted a downtrend, and so we place our trend line above the downtrend. Next, as we look at the current price, we spotted another possible continuation pattern as price hits the trend line, while the stochastics is at overbought level. And so we want to wait for the stochastics to confirm the continuation pattern by waiting for it to cross back inside the overbought level. And once the pattern is confirmed, you take a sell position as price pushes downwards. Now moving on to the second pattern, which is called the breakout pattern. This pattern forms when price breaks out of a trend line, causing the trend to switch directions. So again, you cannot take a position just because the price broke out of a trend line, because it doesn't guarantee that a trend change will occur. You still need additional confirmation to avoid false breakouts. And one of the ways you can do this is by looking for signs of momentum loss before the breakout. Let me give you an example. In this chart, we can see that the price is on an uptrend, so we draw our trend line below here. Now you can see that the price was making higher highs. However, when we look at the latest price action, the price suddenly made a lower high instead. What this means is that buyers failed to push the price higher, which is a sign of momentum loss. Then we saw that the price broke out of the trend line, which further confirms the trend change. So this is a good opportunity to take a sell position and watch the price pushing down from there. Let's look at another example. Here we spotted a downtrend, so we place our trend line above it. Now notice that the price was making lower lows before. Suddenly, it made a higher low instead, indicating that the downward trend was losing momentum. Then, we saw the price broke out of the trend line, which again further confirms the trend change. So, this is a good opportunity to take a buy position and watch price move in your favor. Another price action analysis that you can use to confirm a trendline breakout is by spotting double rejections before a breakout appears. Let me give you an example. In this chart, we can see that the price was on an uptrend as price was making higher highs and higher lows. Now, as we look at the latest price action, we saw that the price failed to make a higher high and formed a double top pattern instead, indicating a strong rejection in this area, which is also a sign of momentum loss. Next, we saw the price broke out of the trend line, which further confirms the trend change. So this is a good opportunity to take a sell position and aim for significant profit. Let's look at another example. So again, here we spotted a downtrend, so we place a trend line above it as price was making lower lows. Then we also noticed the same double rejection pattern at the bottom, indicating that there's a strong support zone within this area. Next, we saw the price broke out of the trend line, which again confirms the trend change to the upside. So this is a good opportunity to take a buy position as price continues in the direction. So I just revealed to you one of the best trend following strategy to make consistent profit in the market. Don't forget to always wait for confirmations before executing a trade.